Let's get started. Looks like we have the majority of our viewers tuned in. Welcome to the live webinar, What You Need to Know About Federal and Provincial Financial Aid. We appreciate you tuning in very much. I'm Kevin Hilton. I'm the CEO of Impact, and I wanted to start out using a quote by Alexander Graham Bell. He was a transplant to Canada from Scotland, and he said, "When one door closes, another door opens. But we so often look so long and so regretfully upon the closed door that we do not see the ones which open for us." And, there's a ton of anxiety and confusion that reigns supreme around the world, really, not just in the US and Canada. And I think it's important to keep in mind as ironworker leaders and in business leaders that we deal with, there's a lot of opportunity hit there. We may not see it right now, but this is an opportunity. And we know that nothing on earth grows without water and sun. And today we have Lindsay Maskell and Jeff Bradley to discuss how that water and sun in the form of aid from the Canadian federal and provincial governments gets into your hands. It's of paramount importance that you not only live, but also thrive when we come out of this. There are many, many economists that say there will be a huge pent-up demand that will follow this terrible pandemic. And so we need you posed for it. We need you healthy, and we need you ready to rock. And part of that is keeping you on your feet right now through financial aid in whatever form it comes. So, like I said, we've got two subject matter experts with us today. The first is Lindsay Maskell, who is a strategist and consultant in the public affairs, crisis management, government relations, and advocacy fields, working with the iron workers and their contractors to help secure funding for training center expansions and upgrades. And she launched her consulting business in 2014 after more than a decade of senior political experience at Queen's Park, where she was a senior advisor to the Premier of Ontario and chief of staff to the Minister of Economic Development and Trade and the Minister of Natural Resources, where she managed some of the most complex issues in government. And, she's an experienced campaign manager and regularly consults on media relations, political affairs, and crisis management. And if this ain't a crisis, I don't know what one is. And she'll be accompanied by Jeff Bradley of Eckert to discuss pension issues that are being affected by the pandemic. And Jeff's an actuary and principal at Eckler Limited. He specializes in multi-employer pension plans and works with several pension plans in the construction trades. And he's an actuary to the Iron Workers Ontario Pension Plan. So before we get going, I just want to give you a few ground rules here. All the resources that you hear today, including this webinar, this webcast, will be recorded and posted on impact-net.org website, along with other Canadian content that's been supplied to us that will provide you for guidance in getting this critical aid. The other piece is we collected some data through a survey that many of you answered. Thank you very much. We also asked some questions on there that we will run through. But if during the course of this webinar you have questions, down in the middle of your screen at the bottom, there's a Q&A button. Please use the Q&A button to ask your questions. Steer shy of the chat button. We won't be monitoring the chat button. Use the Q&A button to make sure that you ask your questions of both Jeff and Lindsay. And if for some reason there's a question that you'd rather ask offline and direct it to one of our many subject matter experts, just send your question in the form of an email to CAREACT, CAREACT, at impact-net.org. Again, CAREACT at impact-net.org. We will funnel that to our subject matter experts and get you as good response as possible, knowing full well that all the guidance relative to these programs in Canada are changing daily and sometimes hourly. And the last point I want to make is your Impact Regional Director in Canada is a guy named Bert Royer. He covers a very small territory from the Pacific Ocean to the Atlantic Ocean, but he is available 24/7, and you can get Bert's contact information off the Impact website. And with that, for a few opening comments, I will throw it to Lindsay, and thank you both very much.
Perfect. Thanks, Kevin. And thank you to Impact and you and Bert and the whole team for putting this together. The new reality is spending about 5 hours a day watching press conferences of all of the changing updates on programs. So it's a new world that we're all living in. I want to start off, first of all, by saying thank you to everyone that joined us for what you're doing. Normally, I would say I'm sure you have better places to be on a Friday afternoon, but we're hopefully all at home. So hope everyone is staying safe, and it's definitely a new reality as people are working and taking care of their families, and some are running homeschooling now. So I know everyone is doing double duty, so it's greatly appreciated that you're taking a bit of time to tune in and hear a bit of these updates that we've wanted to provide. I'm just going to share my screen for a second to show you the quick subjects that I'm going to cover. So the main programs in Ontario, of course, are the Canadian Emergency Wage Subsidy. And I know from the survey, there's a lot of questions about this. The Canadian Emergency Benefit, we're calling it CERB, even though it starts with a C. That's the way the finance minister is pronouncing it, and how it will interact with people that are already collecting employment insurance or may have been in the EI system. And then we're going to talk a little bit about the Business Credit Availability Program, and then a little bit about how we go through how we track through economic recovery. As Kevin was saying, when I spent a lot of time in government between 2003, 2014. So I was fortunate to be on a team that worked on our economic recovery plan after the economic crisis, and working with the federal government and joining with the province on the infrastructure stimulus program that most of us had a real benefit from. So it is, that's what we're going to quickly cover off. And I know that we got a lot of questions related to these programs. So I think I'm going to do just some high level on them, and then we can get into some really specific details with the questions, because quite a few of them were actually similar. So the thing that people are really waiting for are further details on the wage subsidy. Last weekend, Parliament met to pass legislation to fund a $75 billion amount to do the wage subsidy, which is essentially having employers run a version of employment insurance through the employers, and having you administer it by providing 75% of a wage subsidy to keep people on the payroll. And this is a really interesting opportunity, and it's changed changed a couple times, even just this week. So the threshold for it's a 12-week program. In the first month, you just need to show a 15% reduction in revenues. So for the wage subsidy program, for those that are considering it, it's not open for application yet, but the finance minister, Bill Morneau, said today that they expect money to be flowing by the first week of May. For those that know about the CERB funding, know that people applied and within 3 days they had money. So this is going to be run through the same platform as CERB. So it's basically through the MyCRA website. And the best tips for being prepared for applying when they do open the portal for applications is to make sure, first of all, that you can get onto your MyCRA site, your business account site, and that the logon is working properly. And then you can show there are two different mechanisms to be able to show revenues. They're willing to take January, February, March of this year. So January, February, March of 2020, or you can do the previous year. So there's a couple of different versions to show the 15% drop to then have the money flow directly to you to administer. It also covers 100% of the deductions, so EI and CPP. So those things are 100% covered during the crisis, and the wages are 75% covered, with a hope that you would attempt to cover the other 25% if possible. These things actually bundle up in some ways as well too, which I know some of the questions are about, so we will get into that. But the CURB funding, so the Canadian Emergency Response Benefit, is joined, basically they've taken the EI program, and people that were on EI were still running through that. And when they are no longer have EI benefits, they move over to the 16-week CURB program. And this was the government's attempt to just get cash flow into the economy very quickly. So a $2,000 a month benefit for people that applied that were not working or weren't being paid for 14 days. Initially, it was that you needed to be 2 weeks without income, but they modified it this week that you could actually work and get about $1,000 of income and still receive the full CURB benefit. This was really targeted, obviously, at people who work in our grocery stores and food services, and that were probably not making much money to begin with, and to incentivize them to work and be able to top up their income. But for people that are being not able to work right now, they can get this benefit and still now earn up to an additional $1,000. And this is a 16-week program that people have to apply for each month. Of course, if somebody is then going back and still is EI eligible, it's interesting because it does put a hold on other EI benefits. So you essentially, if you were already on EI, when it runs out, you would be eligible for CURB. So that was an additional change they made this week that's very beneficial to those in parts of Canada that were not in the boom that we might have been in Ontario and Quebec and British Columbia. If somebody was already on EI, they will be able to be eligible to move right over to the CURB funding. A program that is just started rolling out last Thursday that's an interesting opportunity to bundle up with is the loan guarantee program. And the loans, I always say a loan is the advice you would never want to give anybody in an economic crisis is to just put it all on the credit card. So a loan is still not new money, but this is the best possible version of a loan, and is very interesting both for contractors, for union offices, because it's a $40,000 loan through your financial institution that you already have a business account with. You have to have had a business account by March 1st. And you are eligible for a $50,000 loan that is interest-free for up to 1 year. And $10,000 of that loan is forgivable if you pay it back within 1 year. So it's a good way to get some immediate cash flow if that's a position that you're in, particularly because, as we know, if the wage subsidy is not moving until the first week of March, and it's retroactive to, the first week of May, and it's retroactive to March 15th. That means that employers are, if they're looking to do the wage subsidy and have been keeping people on the payroll, that's a long time to be without some cash coming in if you've had a big reduction. So the loan program, again, is also for people, for not-for-profits as well as small businesses. So for local union halls, it's a good opportunity as well. If you can pay it back within the year, then you obviously get the $10,000 benefit. The economic recovery is going to be interesting. I asked the question in the survey about how long people thought it was going to be, and it was people had everything between 4 to 6 months to 2 and 2.5 years. And the truth is we don't really know, because we're still evolving. We're still having numbers topping each day. So here in Canada, we haven't reached our peak. We have different results happening in different provinces. Those in Western Canada are really to be applauded. We're seeing the differences in our different provincial health systems on a daily basis on how well that we're recovering in this scenario. So different economies are going to be able to open back up before others. But one thing I also wanted to touch on is what we're doing collectively with our other partners. So with the Canadian Building Trades Union, they've had regular working group meetings about making sure that we're regularly aligned with government about what we need, what will be useful for us, how do we participate in the economic recovery. Some of the things that Kevin Bryanton has been on regular calls with cabinet ministers, from infrastructure to labor, economic development focused. Things that we've been talking about to think about our longer term economic recovery is, of course, continuation of UTIP. It will be really important to flow some money into our training centers, help potentially supporting people even with a wage subsidy to get back into a classroom when we can all be back together in the same place. We've talked to them about, with the same way that they rolled out large scale infrastructure funding after the last economic crisis, and it's obviously part of the government plan, would to be include in the Knowledge Infrastructure Fund, which many of you have been on projects at colleges and universities. That was a fund targeted to fund those institutions, but we would like to be included in that so that training centers could be included for bricks and mortar, large scale renovations and expansions. So that we can make the improvements that we need. We've also obviously talked about some additional wage supports if people have to go back into the classroom, because the way we work on work sites will be different. Before I pass it over to Jeff, I also just want to obviously reinforce that different provinces have different labor legislation, but the great thing is that we are all still in a position of being able to refuse unsafe work. So we have different people working at different levels. So I know in Quebec, hopefully you're opening back up soon, but you went from close to 100 to 0% employment as the province did do a complete construction shutdown. In Ontario here, we're just probably just under 80% today. But of course, Western Canada was lower to begin with, and this is a big economic hit. The one thing that potentially has been a nice shining point through this is, we went through an election and we've been talking about Western alienation and what we need to do for Western Canada. And the rest of Canada does not do well if Western Canada is not doing well. And I think this has been good for bringing people together, as we saw Premier Jason Kenney delivering PPE equipment to Ontario, because we have a need and we're all in this together. And hopefully we think about that as a nation when we think about what we need to do to support our Western Canada economy, because we don't do well without it as a whole. So there's a lot of things that have been going on, and as we said, it's changing on a regular basis. But I know that there's some great questions that Kevin has that have come in that we'll get into some of the details about how some of these things bundle up together and how they can work for you. And we're going to get into that. But first, we wanted to make sure that if we were going to get together in this the way that we did, do a brief update on pensions and pension protection, because we know that's probably front mind of what you're hearing from your employees and from your members. So with that, we wanted to have Jeff on the line and have somebody give an update on pensions.
All right, thanks, Lindsay. So I'll spend about 5 or 10 minutes just talking about what we're seeing in terms of impact on pension plans across Canada. So 2019 was looking pretty good. Investment returns were strong, and that actually continued into first part of 2020. And then around mid-February, that's when the COVID-19 fears started to hit. We saw the market started to drop off mid-February. And since then, we've seen significant measures like social isolation, shutdown of non-essential businesses, travel bans. All of those things had a pretty significant impact on investment markets and the global economy in general. And what we're seeing for a lot of plans in Canada is in the first quarter of 2020, the asset values of the pension plans declined anywhere from 5 to 15%. Now, that's a pretty substantial drop in one quarter, and that's a pretty short period of time to see a 10% drop or 15% drop, whatever the return was. To put that into context, a lot of pension plans expect to get at least 5 or 6% return each year. So when you see a 5 or 10 or 15% drop in one quarter, it is alarming. Now, we do expect the markets will rebound, and we have started to see a bit of a recovery in April. But the general expectation is that the economic recovery will take longer than previous virus outbreaks. We can look back to viruses like SARS or H1N1 or even Ebola or Zika, and that gives us a little bit of information in terms of how things play out after viruses come and go. Now, obviously, COVID-19 is a bit of a different animal. We have never seen this type of shutdown and social isolation that we're seeing for COVID-19, and these are required for health measures. But that's going to lead to probably a longer period to recovery than the previous virus outbreaks. Aside from drop in asset values that we have seen, another issue that has come up is what's called liquidity issues or cash flow issues, and that's for pension plans specifically. What I mean by that is contributions to pension plans typically for these types of plans are related to work levels. So if work levels are expected to decrease because projects are being shut down, with less work hours, you're seeing less contributions flow into the plan. that's what leads to a cash flow management issue. And the way that works is typically what you'll see is as contributions come into the plan, they're held as cash temporarily. And then since it's held as cash, you can use that cash to pay monthly pensions to pensioners. Now, that doesn't mean that there aren't other assets in the plan, because there would be lots of assets. They would be invested in things like stocks and bonds and infrastructure and real estate. But if you have cash on hand, you want to avoid selling assets if you don't have to. So if you see a drop in contributions, that means a drop in the cash availability. A plan could be in a situation where you have to sell or liquidate assets when it's not a good time to do that. You don't want to sell assets when you just saw a 15% drop in the value and lock in those losses if you don't have to. So that's where a whole cash flow analysis and cash flow issues could come into play. Now, what do plans need to do about that? There are a few things, and the first thing, and probably the most urgent thing, is to evaluate the short-term cash needs. So you look at what amount of pension payments are paid each month, what amounts required for fees that are paid. Do you have enough money coming in through contributions to pay those things? If you don't, that's not the end of the world. It just means you need to now come up with a plan to liquidate assets. And ideally, what the plan wants to do is gradually sell assets. You don't want to all of a sudden, a week before pension payments are due, go and do an emergency sell on assets when the assets are down 15%. So that's the first step, is looking at cash flow needs. Plans are also having conversations with investment managers just to get a better sense of what are their expectations for the economic environment and the actual investment portfolio going forward. Now, aside from short-term cash needs and discussions with investment managers, we are expecting that the government could provide temporary funding relief for plans. And funding relief basically just means easing up on the rules. So I should mention, funding rules and pension law is specific to each province. So each province could come up with their own way of handling this and their own way of easing up on the rules. But really the goal is the same across the board. The goal is to avoid making a cut to pensions today, and then a year from now, or whatever the timeline is, when things rebound, you're back in good shape and you didn't need to make those cuts. So that's what we're trying to avoid with any temporary funding relief. I have seen some of the proposals that have been put forward to the Ontario government. Don't know what the actual funding relief will look like yet. But to give you a sense of a couple of things that have been put forward, I won't go through all the details, but a couple ideas. One is the government could provide a loan to pension plans that need it. And that loan could look like, say, 6 months worth of pension payments. And that loan would be repaid to the government within 5 years. And what that would do is that would take pressure off of plans that have cash flow issues or liquidity issues and get them through the next 6 months before hopefully things start to turn around. Another example would be the way the current funding rules work for most provinces is that we as the actuaries need to look at what is the expected contribution level over the next 12 months, and is that enough money to pay for all the things the plan has to pay for? If it's not enough money, then you're in a situation where you have to potentially cut benefits. Now, a relief measure could be, instead of looking at contributions over the next 12 months, let's look at the average contributions expected over the next, say, 2 or 3 years. What that'll do is that'll allow the plan to ride out this period where work hours and contributions may be lower over the next 12 months. But then if we expect a rebound in 18 months or whatever the timeline is, you expect an increase in hours at that point. And so it balances out. We are not left with low contributions 1 year and then high contributions the next year. So those are just a couple of the high-level ideas we've been proposing to the government. We'll have to wait and see what the actual relief looks like. But those are some things that definitely could help, at least over the next 6, 12, 18 months. I'll leave you with, before I pass it back to Lindsay, I'll leave you with one final thought in terms of pension plans, and it is a positive note. That is that these plans are designed to operate over the long term. And yes, while we do need to assess the current risk and we need to take we need to manages the virus crisis and cash flow needs, we also need to keep our eye on the long-term view. When I say long-term view, I'm talking 30, 40, 50 plus years from now, because that's the way these plans work. In the grand scheme of things, if you consider the current market volatility or work levels being down for the next 6, 12, 18 months, that's a relatively short-term issue compared to the next 50 years. Pension plans are designed to handle ups and downs, to handle these shocks to the system, and you ride them out and you continue on. I know I've received quite a few calls from different plans and administrators and trustees, and rightfully so. They're worried, is the plan going to be here tomorrow? Is the plan going to make it through this? The short answer is yes, the plan will make it through it. There may be some bumps along the road, but the plan will continue to operate. Members will continue to receive a pension, and there will be a rebound at some point. Now, there's no way to know how long it'll be. We need to see how this plays out. Is it 6 months? Is it a year? Is it 18 months? I don't know the answer. Don't know the answer to that, but we're pretty confident saying that, if things go up and down, it will come back. Work hours will return, markets will return, and what we want to do is ride out the storm now and get back to a situation of more normal times. So I'll pause there and turn it back to Lindsay, unless you have any questions.
Thanks, Jeff. So Kevin, did we want to start with some of the questions that came in?
Yeah, why don't we go, again, a lot of people had weighed in on the survey with questions, and some of them are pretty deep and insightful. A lot of them revolve around the timing of disbursements and things of that nature. And, in our world, we cover a wide spectrum of organizations, for-profit organizations, local unions and district councils and associations. And the one asks, as we're a nonprofit organization, we're interested in knowing more about the calculation and eligibility of the subsidy program. Eligibility, from our understanding, is based on revenue received in 2019 and 2020 for a month in question. Every business has revenue and expenses. In any given month, an organization could have a surplus or not have a surplus. If we were to compare the years of 2019, March, April, or June, should we be comparing the end result to determine eligibility requirements? I.e., we could have $100,000 in revenue in March of 2019 and have less expenses than $100,000, resulting in a surplus in March of 2020, and have $100,000 and have more expenses, resulting in a loss.
So it's a good question, and the way that the government's trying to simplify this to make it easy, again, their objective is money to flow as quickly as possible into the economy. So they want to make it really easy. And the broad way to think about the wage subsidy is basically they're trying to make everybody eligible that isn't a public sector entity. So a university or a hospital or a school, for example. So not-for-profits are looked at a little bit differently than a business. Because they know that it isn't consistent and it changes month to month. So they're looking at revenues, but there's a couple of ways that you can do it. You can do revenues from last March, or you can do it from January and February of this year and present whichever one shows you in the light that would make you eligible for the subsidy. The other thing is that they also know that we're an industry, in terms of working with us, we're an industry that has been impacted and is going to be hit. So they, each day they've sort of talked about changing things to make more groups eligible. So if you an initial consult with one of the CRA advisors that's doing this, interestingly enough, the way it's been able to move so quickly is because all of our income tax being deferred, they've moved everybody that would be doing our income taxes over to work on this. And so they're very, they're astute to all of this, and they're going to try to work with people to make it work, because anyone that they can have do the wage subsidy means somebody they don't have to have on EI or now this CURB funding benefit. And it's of interest both for our economic forecast, but also for administration, so that they have less people doing that work and then can focus on other things. So their interest is to have you be eligible. That's why there's been so many changes to it. So it really is meant to work for us. You'll do an online application, and then they'll talk about different questions. And one other element that's useful to point out, that this applies for the union halls and for the district councils or any training group that has come together that has received any UTIP funding or infrastructure funding, is that you can remove that. So if you got a transfer payment for equipment last March, and so it looks like you had additional revenues, they don't count any government income sources for not-for-profits because many of them receive funding from the government, like if you were a charity, for example. So you can remove any government funding sources. If you're a training center, that can also be seat purchase money because that is money that has come from the government. So they're doing everything to try to make it flexible for you to show that reduction of the 15% to make you eligible. They have an interest in you administering it instead of them.
Gotcha. That's a good question. So very precisely, this is open to a local union or a training hall, just like any other organization that like.
Absolutely. And if there was, for whatever case, if somebody was not eligible or had still had, if somebody was still operating at 100% work and the money was coming in, they're still eligible for another program that had initially come out, was our first, people might have heard of the first version of our wage subsidy program, which was a 10% wage subsidy up to $25,000. So even if, say, for example, things get back on track and people aren't eligible for the wage subsidy come June, in the last month of it, they are still going to be eligible for this 10% wage subsidy, which was basically up to $25,000. And this is done via your tax remittance. So when you do your payroll, you would remove 10%, and there's a line for it in accounting to remove 10% that would not have to be remitted to the government in taxes. And that was initially to help with short-term cash flow. Some groups were able to do the first round of that before the wage subsidy is kicking into place, because as we said, the money for the wage subsidy, the goal is to have that money flow the first week of May. So we're still more than 2 weeks away, and we still have the intake date. But I would like to point out, again, just the two most important things to get ready for if you are interested in the wage subsidy is make sure that you can get onto your MyCRA business account and log online, because that's where the portal will be for application. So same as the CERB funding. And the second thing being is to pull out just revenues, essentially. The question is revenues in those three different timeframes. So either March 2019 or January, February 2020, and then what you had in March for revenues. And again, you can, if you are not set up as a not-for-profit or association, you're able to remove any sources of income that came from revenue that came from the government.
Good. That answered a lot of questions. So a lot of people had questions over the timing of it. You're really looking at early May.
Yes, correct.
Even if you apply now, you're still looking at early May, or is there a lag time, a running lag time, or do we not know that yet?
Well, we're assuming that it's going to work the way that the CERB funding worked in terms of time frame. And just so people know, we're talking to government about this on a daily basis. So a little funny thing is, so one of my good friends works for the Minister of Finance, and she travels with him. And so we've been talking on a regular basis, but because they're in Ottawa working together. And so it's, I feel like they're the only people that are together. So every time we get chatting, he jumps in on the call because he's just happy to talk to people. So
he's not the only one.
So we're keeping him on his toes. We can always ask for anything that we need. And so what they did with the application is they made it a very simple application form, because they want to be able to move for speed. And then they'll basically just call you if there are questions that we need to actually troubleshoot is the goal and intent. They have not given us a date of when the portal is going to be ready. They've processed over 7 million CERB funding applications that are basically in the same model. So they were dealing with that, building it. But again, because the legislation only passed last weekend, they haven't given us the date of the intake date. But the way it worked was that with the CERB funding, when it opened, when you could apply on the Monday, people got money on the Wednesday. Wow. And they broke it out that you applied, so to not overwhelm the system, which there has been no technical issues thank God, because that's actually a thing we're a bit known for here in Canada, is like reinventing the wheel of these types of systems, and the Phoenix payroll issue and whatnot. But they're doing it all through the CRA and through banks and making it a lot easier. And so, yeah, money was flowing within 3 days of application on the CURB funding, and they hope for it to be as simple as that. They're going for speed and will fix problems on the back end, right? So these are things that are going to get fixed on the back end. That doesn't mean that any of this money, the wage subsidy is not a loan. It's a full grant. It's about you basically administering essentially a version of EI for people, whether they're able to be working or not working at that point in time. So, and it doesn't have to be repaid, but it is worth noting that there is a big fine for if you are caught falsifying any of this information, because they're putting a lot of trust in us to do this fairly and to be a part of the solution.
So on the loan program, do we know what the interest rate is?
0% in your first year. So it's a government-backed zero interest loan through your financial institution. So if you had a business bank account, or even though I know set up as a not-for-profit, sometimes it isn't listed as a business account. But if you had, whether you're not-for-profit or a business, you would go to your your banker, and it's a $40,000 program. And the qualification is you actually only have to have a payroll starting of $20,000. So this is really good for, I mean, everybody does, right? Whether you're a district councilor or whether you're a union hall, everybody has employees. So it has sort of a minimum $20,000 threshold to be eligible. And if you repay it within the first year, you repay $30,000, then you are up $10,000, which is a good strategy across. I mean, think about our locals across. It's a good strategy to infuse a bit of cash flow.
So if you're a small employer, do you keep paying your people normally and then, wait on the lag time to get the money that you need to subsidize yourself?
Yeah, this is what it was intended for, was to be this stopgap for cash flow until the wage subsidy is there, if that's the model you're going to go with, so that you could get some money. And then when the wage subsidy comes back to you at 75%, retroactive to March 15th, it would mean you would then have the money back in your pocket to be able to repay that loan if you are going to, if you are in a position to be able to fully subsidize the other 25% of the pay.
Let me ask you this. There are multiple programs. Do you apply to all of them, or do you pick and choose? Are you penalized for applying for more than one?
So they've set this up so that the two things that you can't do is both be collecting CERB and be on a wage subsidy, right? So you can make up to $1,000 a month, but after that, you would not be eligible for CERB, which actually puts the responsibility on, if you had not the employer, but their individual employee, that if somebody was seen to be collecting, trying to collect the CERB, the $2,000 a month, while they're being paid in on the wage subsidy, that becomes their problem to deal with Revenue Canada at tax time when they make their claim. But so they're asking people obviously that you're not allowed to do both. If your employer is paying you, you're not eligible for CERB funding. And they ask you to affirm to that. So they're asking you in good faith to tell the truth that you don't have that you aren't being paid. But they are just trying to move money quickly into the pockets of Canadians so that we keep our economy going. We'll know next week if we are into a full recession. And but part of that was just to get some cash flow going.
As people's EI claims start running out, their eligibility runs out, automatic extension, or is there anything they have to do?
Yeah, so what will happen is if somebody was already collecting employment insurance, they then become eligible for CERB when it runs out. And they made some changes this week for that specifically because, for example, seasonal employees, students that were maybe going to be hired, people that were already on EI and didn't know if they would be eligible. So it is EI, they basically streamlined it completely through the CRA for this CERB funding. And it would mean that when your EI runs out, you do get moved over, But then you do have to apply each month and give them an update on your employment status. So you do get moved over automatically into the CURB route, but you do have to apply each month. So they do it month by month for 16 weeks. And of course, then they're looking at what they do about, the number of hours that you had to work previously to qualify. So, much like your airline status is realizing that we're not going to be able to fly, we're going to extend the benefits. They're going to be looking at what happens after this for, when people get back to work, but they might have to use our EI system through this crisis. Obviously, we need to modify that to make it work still for Canadians as we ramp back up. Some of these programs are really focused too about how we do track back in, right? So the wage subsidy to ease people in if they're not being able to work full time or piecing things together. They have a job, don't have a job for a couple of weeks and then are back off. So they really are meant to be able to be layered and to be supportive as we figure our ramp back in, because work sites are going to be changing, and they're going to try to be as flexible as they can be.
So if I run my own company and I draw a salary from that company, am I still entitled to the CERB?
If you are running a company and you are drawing salary, you should do that through the wage subsidy, because if you can't be drawing income and get CERB unless you're drawing under $1,000 a month. So the best thing to do would be to do through wage subsidy, and it covers your whole payroll. So if you already paid yourself on payroll, and I understand this is actually a really good question, because a lot of people would often just pay themselves on dividends instead of a payroll. But if you move yourself over to payroll, that would include then yourself. If you choose to not draw any income out of your company through this time, because you have all of these other expenses and are paying people, so then you are essentially foregoing your salary to the benefit of your company to keep this going until money flows from the government. That would actually make you qualify for the $2,000 in CERB funding. And these are scenarios where it's worth talking to the rep at CRA, so applying online, and there's a little thing about you have a specific question about it, but I know this is what some people are doing, like not so much a union or a contracting company example, but if a restaurant is doing takeout and delivery and they run the franchise, they're just not drawing any income from themselves, and they're going on CURB and using that as not taking their own pay as cash flow into their own businesses. So there's two ways to do it. But I'm hoping for the most part that the wage subsidy, which is obviously a higher amount of a maximum of $857 a week, so it basically is capping it at about a $58,000 a year salary as a weekly payout, is the higher benefit. Essentially, it's the higher value benefit. So the wage subsidy is actually probably the preferred route in that case.
And so, our employers still have to pay benefits if they retain their employees, various benefits. How is that accounted for in this?
So there's obviously in our world, there's two different types of benefits. Still sorting out if people are on wage subsidy, what that means for their benefit payments through our pension and benefit plan. So we obviously have more information that needs to come there as we sort that out. But what it does mean for your deductions for your payroll, for employment insurance, and for CPP, is that that's actually going to be 100% subsidized. So the payroll subsidy is 75% of your gross payroll, but then they are covering off those additional costs of CPP and those benefits. So it's interesting because we're obviously draining the bank on this, and then we're going to be subsidized to pay that out at 100%. So that's still a bit of a detail about how we're going, because the intake hasn't been launched. We actually don't have 100% complete modeling for that, but we have a couple of different options that we're looking at, and people are talking to the government about to make sure that we do this in the best way for our members.
Gotcha. I've got one more. I think we answered the other questions that we received online. Local unions are eligible Local union has 2 years of operating costs. Will they qualify for the loan? Yes. The 75% wage subsidy will the local have to pay the money back? We addressed that issue.
Absolutely not. That's the best news.
That's a good news.
Yeah.
Is it possible to concurrently utilize the wage subsidy and the work sharing program?
Yes, that's actually a really good question. So work sharing is obviously, and I think exploring the way this work sharing is going to happen is going to be really important, because for the health and safety of everybody working, it's going to be completely different. We were using the example of if you have to get 50 people to the 50th floor in an elevator and we don't have a vaccine yet, that's not happening, right? So there's going to be a lot of changes, and so work sharing is probably going to be a good way forward for people. And you can actually use the work share program, which is run through EI as an application point, and do the wage subsidy through that. So you would still be eligible for wage subsidy, but you're obviously showing that you're dispersing and being able to keep more people on the payroll, which is exactly what the government wants, and will fund you to be able to do that. Again, if you're dispersing it so much that somebody is making under $1,000 a month under a work share program, they would actually still be then also, as that employer, individually eligible to receive the $2,000 CURB benefit if their work share amount had them below $1,000 a month.
Excellent. Good. Those are the questions we have. Unless anything comes in the meantime, I think we're in good shape. Let's just wrap up. Just as a reminder, if anybody has questions, you watch this online on the Impact website. This is recorded. It'll reside on impact-net.org. You can continue to ask questions. Just email us at careact@impact-net.org. You can always get in touch with us through normal channels, whether it's myself, Bert Roy, or anybody else on the staff. And then, all of the documentation is there. If there is the need for further clarification, we'll avail ourselves of Lindsay or Jeff or whomever we need to get you the vital information. Obviously, the most important thing is to keep our employers in business so that they can employ iron workers. And finally, Lindsay, Jeff, you've been a font of information. Really sincerely appreciate this. Can't thank you enough, and keep the information rolling our way.
We will. Thank you for having this. I think the big thing is we will want to provide a really good update for people when we get the intake date for the wage subsidy and the additional details that people will need to be able to apply, because that's obviously going to be a big focus for folks. The loan program, people can call their bank now and start that process, but we'll definitely want to make sure that we get that we're monitoring everything really closely to get everything you need for the wage subsidy information as soon as it becomes available.
Well, on behalf of Eric Dean, the General President of the Iron Workers, and his co-chair, Bill Brown, and both the labor and management people and the co-chairs in Canada, we sincerely appreciate it. Thank you guys. Have a great day and stay healthy.
Thanks. Bye, everyone.
Thanks. You too.